Hi, I'm Lightfoot-Brown, Research Analyst at Chelsea Financial Services. We're joined this morning by Chris Taylor from the Neptune Japan Opportunities Fund. So Chris, you famously shorted the Japanese market in 2008. That's a pretty bold move for an equity investor. Why did you do that?
Well, firstly, you've got to remember UCITS rules allow you to do that. But secondly, it was because as head of research, I've done a lot of work into the US credit markets, and we'd actually figured out that with the default rates resetting to just cyclical norms from record lows, basically the banks would be out of equity capital, and that's before the markets and the economies turned down, which would in turn make any subsequent economic or market downturn a lot worse than normal. Therefore, the most vulnerable economy of the lot was Japan.
You're also renowned for having a very negative view on the yen. With the currency depreciating quite considerably, has that view now changed?
No, not really, because they're probably not even a third of the way through what they need to do. Because again, with my research hat on, I spent about 9 months going through the Japanese economy in 2009-10, and it became very clear that the only way that they could correct their budget deficit and eventually pay down their national debt would essentially to be raise corporate tax revenues, because that was the only source of revenue they could raise quickly and dramatically enough. And to do that, given that it's the big Japanese companies that pay the bulk of the tax and they make the bulk of their profits overseas, if you drop the yen, then mechanically the translation impact means the overseas earnings become worth progressively more in yen terms. And obviously you tax that higher absolute or aggregate profit level, then that fills the hole. So really it's a combination of, there's genuine profits growth in Japanese companies, particularly the big global multinationals, which effectively you would get even if the yen stopped dead. But they have an absolute requirement to keep the pressure on the yen to boost the tax take artificially, if you like, through a depreciating yen, to eliminate the budget deficit and pay down the national debt.
Sure, okay. Yeah. The Japanese economy has had a good run the last 2 or 3 years, thanks largely to Abenomics. Can this continue?
Well, I disagree. It's entirely down to Abenomics, because there was a lot moving in the right direction before. What they've done is accelerated the positive developments and added to them. But again, it's very early days, because you've got to think that basically Japan's missed out for the best part of 30 years on the broad economic developments that we've seen across the rest of the world. And unsurprisingly, so has its stock market. The two go together. And 2 or 3 good years isn't sufficient to retrieve 30 bad years. So again, we're only in round 1 of this. It's got to keep going for at least 5 to 7 years to correct the underlying situation. If it doesn't, the country goes bust.
Sure, thank you.
That's a cheerful note to finish on.
So where do you see the opportunities in Japan at the moment?
It's the same old thing as the last few years. Basically, the guys that keep delivering the strong earnings growth. And these are the big global multinationals, partly on the fact that they dominate their sectors like Toyota, and they key into all the world growth, particularly the emerging markets beyond the big 4 BRICS, as well as the US recovery. And they're the ones that get a second helping hand, as it were, from the weak currency. So it's, in a way, it's dead boring, but it's more of the same for the foreseeable future.
That's great. Well, thank you very much for coming in and talking to us this morning, Chris. Thank you.
Okay, thank you. It's been a pleasure.